Global share markets lifted over the past 24 hours, and this was off the back of slightly lower oil prices. OPEC have announced that they may increase their production levels in response to the tight supplies recently, as well as the higher prices that have been occurring over the past few weeks. Of interest to farmers will be some news out of McDonald's. Of course, this is important to our cheese exports, as well as our manufacturing bull beef and cow beef exports. McDonald's announced that their same-store sales out of the US market didn't climb quite as much as they were expecting over the past month. This has been blamed on the still high unemployment levels out of the US, as well as higher fuel prices potentially choking off consumption. Higher equity markets overseas has seen the New Zealand dollar climb somewhat, and on Wednesday morning we are once again trading over 74 cents against the US dollar. While equity markets have climbed over the past 24 hours, grain markets as traded on the Chicago Mercantile Exchange have actually fallen somewhat. Of course, over the past 9 months, weather interruptions have seen grain supplies decrease and prices have also increased significantly. However, the US Department of Agriculture has announced over the past couple of days that growing conditions out of the major producing areas of the US have been pretty good for their winter wheat production. In addition to this, some analysts are predicting that Middle Eastern stockpiles are quite high and this won't have too much effect on demand in the short term. Of course, grain markets are very important to livestock production, and this is a dynamic that I do watch very closely. Any increases in corn prices especially does have a big impact on livestock production around the world, particularly for dairy and for beef. New Zealand wool prices remain very strong, and at the recent auctions over the past week we've once again seen further increases. Of course, supplies are very tight at the moment, and this should be a further underpinning factor for strong wool prices right through 2011. Recent estimates suggest that South American, Australian and New Zealand supplies through 2010 and 11 will decrease by around 2%. This does indicate that we'll see tight supply conditions remaining for some time to come. Demand will likely be impacted by high fibre prices, but the fact that cotton prices out of the US are at all-time highs and recently we're trading up to around 207 US cents per pound does mean that consumers have little place to go other than to look at wool as a favourable product. We are positive about the short-term outlook for wool and are expecting prices to remain strong right through this year.